WTF? Why is everything selling off? Stocks are now in full-on crash mode. And since we lost our 50 DMA, now we're getting even another piece of evidence by losing our gap fill at 497. We started the week off by talking about how risk-addicted Wall Street funds are shaken as bad news piles up, geopolitical tension specifically. So what happened yesterday? Radio silence. Nothing to see here. But the markets are roiled, which means that stocks are really down this week. Almost everything is red, except for a select couple of blocks. What's so interesting is that we're now down here to 31 on fear and greed, and we're racing to go back down to extreme fear. So extreme fear to extreme greed to extreme fear, extreme greed. Looks like we're racing to get back down to extreme fear. So what's so interesting is that if we look at a one-day performance, there's actually rotation happening, a stealth rally. What this means is that there's actually a number of stocks which are actually green today, a lot of them. There's a lot of stocks in the red team too, cannot get that twisted. So looking here to why tech stocks are down, well, they're in their biggest weekly rout going back to 2022. Specifically, something very interesting shared by Tavi over here on Twitter shows that compared to the money supply or printing money, stocks have not quite made a new all-time high. This is really interesting, almost a double top. But shifting gears to NVDA, man, it's down by 10% today. That's $190 billion. Whoa! So this was only about an hour or so ago, but NVIDIA has now put in its largest decline since at least December of 2022. So what took it down? It was actually another stock. It was SMCI, Super Microcomputer. And this one went down by 23%, lost about a quarter of its value today. So this dove because it skips earnings pre-announcement. In 7 of the past 8 quarters, SMCI issued a news release announcing preliminary results ahead of its routine earnings call. This time they did not, and the stock got drilled. And then we saw sympathy selling, which really took down a lot of these other big names, like every Magnificent Seven, Microsoft, Apple, NVIDIA, Google, Amazon, Meta, Tesla. So what does this all mean? Well, what it means is that as we go into earnings next week, we've got Tesla on Tuesday, Meta on Wednesday, Microsoft and Alphabet on Thursday. Man, these earnings are probably going to really matter. Yes. And what's interesting here is that Tesla is expected to miss. But if we go forward here, we're expecting a beat from Meta. We're expecting a beat from Microsoft. And we're also expecting a beat from Google. So I'm really not sure where stocks are going to go. And we did talk about Netflix today where beating earnings was not enough, right? The stock went down more, right? Gapping crap. Looks a lot like JP Morgan, where after earnings, what did it do? Well, it sold off more. So I'm really not sure. But here's what I find a little bit bullish is that we're likely going to get some more headlines over the weekend between these two countries. We got tons of red. We're closing at the low of the week and the low of the month. And Tesla's probably not going to disappoint. It's probably going to be terrible earnings. So what does that mean? Down into the first half of the week. And then a really big question mark as we go into the second half of the week. Are these companies going to be able to collectively drive us higher? Again, we're looking for a beat from Meta, a beat from Microsoft, and a beat from Alphabet. And then we got Amazon and Apple next week. Just before we go further, I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. So I'm trying to keep today's video short because I will be back tomorrow. But something else I found really interesting is that speculators actually went net long today for the first time, going all the way back to May of 2022. So a lot of things are actually moving and shaking, right? Biggest decline since 2022, sorry. But are dips normal? Yes, dips are very normal. We normally get 7 3% dips a year, 5% dips, one correction, and one bear market every 3.5 years. So we've already talked about these key areas. We've blown through every key area. Now we're looking for 480. And the reason why these numbers are particularly important is because if we pop over here to a monthly chart and we go to SPY, I did the homework before recording the video. You can see here, we're only off by about 3% to actually test our previous top. We're getting awfully close now. And if we look here to QQQ, we're only off by 1.4%, meaning if we repeat today's decline of 2%, we're going to be below that previous high. This is not good. It's not good at all. So we really need the big guys to come deliver next week. And the reason why this is really important is because if you look to say Microsoft here, Microsoft is done what a lot of stocks have also done. It stopped going up. We know our uptrend here. Yep, looks just like SPY. What's good though, maybe good, is that we're actually selling off into earnings. So this dip might actually give these stocks a chance to actually outperform if they're able to deliver good guidance and we get a good reaction from the market. We go here to NVDA. Yep, perfect rejection off that 50 DMA. Boop, sell it off. We even have red volume coming in. So we're seeing a lot of negative price action. So what is really going to surprise the market next week? Because we already know going into this week, we had bad news piling up. Geopolitics, bond volatility, life is getting harder for money managers, boo-hoo. And Jerome Powell didn't have an easy week either. And now we're noting that we have even more volatility from stocks like Supermicro, negative reaction to Netflix. So are people prepared? Are they actually going to be surprised if more companies actually disappoint on earnings? I don't know, but they've had tons of time to prepare for it. So other big cap names, including let's go here to Amazon. Amazon is pretty close to its all-time high, but look here, right? Also stopped going up, and now we actually have one daily candle close below the 50. Here's the part that I mentioned briefly at the beginning. There's a stealth rally happening. What the hell? Equal weight S&P's up. Let's go through this list here. I'll pull it over to the other screen. Let's go through these really fast here because this would not be happening if people were going to be liquidating to sell everything. Look at that. Putting in a little bit of a curl over here on RSP. Interesting. TLT, this would be up if people are fleeing to the safety of US bonds, which it is. We look here to the Dow Jones. Oh my goodness. This is the stock that actually led the decline or the pattern we've been looking at. But man, we got 2 green days in a row. What's going on here? Healthcare? Yep, it's trying to go up. Financials up, right? Bonds, yields go down. Financial stocks can go up. Interesting. We look at CAF or the good stocks out of the Russell 2000, also green here, right? Constructive. Is it enough? Hey, it's a one day that's green. The S&P is down for 6 in a row. So we got to see something give here. What's also very interesting is that, like I said, RSP is green, which means that equal weight S&P 500 is actually doing okay, but it's the NASDAQ which is really dragging things down. It has an oversized reaction. Remember, the Mag 7 now account for roughly 30% of the index, meaning SPY. So let's look at another indicator which is interesting here. So we got NYA, which is up. This is 2,000 stocks, or the New York Stock Exchange. We got energy up. We got utilities up. We got Bitcoin up. There's a lot of things that are up. But if all you're doing is investing in mega caps, it's been a sour week. So now let's look to one more indicator here because I find this one quite interesting. This is RSPT, which is equal weight technology, down by 1.8% on the day, which means that even equal weight equal weight NASDAQ stocks are down less than these ones here. Why does that matter? Well, like I said, if people are selling off mega caps because of what happened to SMCI and NVDA, well, who's going to come and save this chart? Because, man, this is really close, 1.4%. The reason why I'm pointing this out to you is because I am seeing, at least for today, the signs that the market is starting to accumulate or to rotate. Why? We would not be seeing green blocks like we do here. Remember, if we zoom out to the weekly, it's everything red, right? Couple of green blocks like consumer non-durables, but everything else is red. Very clear theme. We look at the last 1 month. It's the exact same theme. Sell everything except for some banks, energy, utilities, and select non-consumer durables. But if we look here to the 1 day, it's very obvious what's happening. If you remove the big blocks or the Magnificent Seven, everything actually had an okay day. So I want to thank you very much for tuning into today's video. And if you want to come back tomorrow, I will have a weekend upload out. If not, watch the video on the left-hand side, and I look forward to seeing you on the next video. Thanks so much.